What is going on, Alpha Hunters? Hope everybody is having a marvelous Monday. Hopefully, you had a marvelous weekend. Let's take a look at what's going on today. Some really weird things going on today. I know you kind of look at the SPY here and you're like, weird, what's going on? Yeah, we'll get into that. Let's just quickly recap kind of the intraday. So we had a nice little gap down this morning. Nothing crazy. Nothing crazy, like a 0.1% gap down there on the SPY. Nothing major. Just kind of trended higher for the first hour and a half or so. Quick little pullback, and then continued higher. Basically until we were where we are now here over the past couple hours. So nothing crazy going on as far as like how the S&P 500 looks. I mean, it kind of looks normal. You'd even say the Qs look pretty good. Look at the Qs, looking pretty good. They also had a gap up or gap down, and then they traded higher. A little bit of a pullback about the same time, and they continued higher. SPY is up 0.3%. The Qs are up 0.9% or so. IWM gap down, chopped around for about an hour and a half, 2 hours, and then they kind of are on a little bit of a run, a little bit of an upward trend. All right, looking pretty good there. DIA, the Dow Jones Industrial Average, a little bit of a gap up, and actually it's just kind of traded higher throughout the day. A couple pullback spots, one to start the day. Nice little sideways pullback there in the going into middle part of the day. RSP, very interesting look here. The RSP is actually leading currently out of these five kind of ETFs that track market indices. And it had a pretty good little gap up here of about 0.15%. And it has traded higher throughout the day. Now, this is the part where I show you what's gotten really weird, and we'll take a look at the dailies real quick. Yeah, RSP, kind of mentioned this last week. Man, these are setting up really good to go on a little bit of a bullish run. So I would expect, I mean, this is probably just what I expected, I guess. Does, when does it kind of top out? I don't know. I would imagine the market's just going to be bullish. Maybe until we see something set up later on. DIA looking pretty good. Nice little consolidation we had last week. Nice little pause. IWM up 0.2%. Not really doing too much. Not taking out last week's high. And that's one of the things that's kind of interesting on the day. RSP and the IWM hugely diverging. And the market was kind of giving you this hint on the second half of November, right when the RSP was just slowly grinding higher, and the IWM was just kind of, pausing at this 179 level, not really breaking out, kind of just sideways moving there, and it's continuing that. The RSP outperforming the IWM is continuing. So, which is rather interesting because we haven't really seen the RSP, but kind of deviate too much away from the IWM as far as over the past several months, even over the past year. The RSP IWM, even though they're not really made up of the same stocks, they've kind of been pacing together. So the market has been treating them the same. Okay, that's what I kind of want to bring that point to your attention. But here recently, that is starting to change. Okay, now we're going to look at a couple other things of what's really kind of going on here. So, yeah, the IWM, not exactly having a great bullish day, but still positive. Qs, look at this breakout, very strong, up 0.9% currently. Yeah, looking pretty good there. Nothing crazy. SPY up 0.3%, looking pretty good there. Now, here's where I'm gonna say this is a little peculiar. You would think the Qs, how much it's bullish, especially outperforming the SPY on the daily. You would think the Qs would be like big tech is going to be leading the day. They're probably up like 1 to 1.25%, 1.5%. Check out the heat map. This is so weird. I can't think of a time in the past 10 years where I've seen this. Microsoft, Alphabet, Meta, Nvidia, AAPL, Netflix, Tesla, the biggest dogs in the market, are all negative. And they're all negative more than 1%. All of them. They're all negative more than 1%. And the Qs are higher by about 0.9%, not quite 1%. So, just interesting, like really interesting. Now, if you take a look at all the other tech names like AVGO, you can see AVGO's up 9.4%. Well, we're going to take a look at some of these a little bit later. AMD, Intel, Qualcomm, like Texas Instruments, up 2.5. Like these, all the other KLAC, all the other names are up. In NXPI are up a lot. Like you can see they're bright green. Let me bring this up. Let me enlarge this. So yeah, you can see all the other names. So that's why you're seeing that rotation into RSP, why the RSP is outperforming the Qs and the SPY today. Look at Adobe up 2.7%. Netflix, Cisco, both up over 2%. Intuit up 2.35. These names are getting bought up. And this is a point I was gonna kind of make is I'm not really and I've kind of talked about this before, on live stream or whatnot, but I'm not really a big believer of the AI story in the big tech names. And I get it. It's a fascinating technology. I think it will have its day of profitability. I don't think it's going to be, tomorrow. And that's where, if you go back and look at how technology stocks, kind of flowed in the late 90s, 2000 time period, they didn't really become profitable in their businesses until about late 2000s. A lot of them. I'm not counting Microsoft. Microsoft's a little bit different. They were around for quite a bit longer, right? But this is where I think AI, they're going to need to build out infrastructure, right? And they're going to continue to build out infrastructure. It's going to be very costly to do that. And the other thing is AI, the AI processing isn't cheap. So all these companies, all these stocks and trying to develop AI is not going to be one that is very profitable at first, because the processing power to process the AI queries and stuff like that, it's much different than search. Alphabet's even made statements about this before, especially over the past year, that AI costs about 10 times more than search queries. And the other thing is who's buying AI and at what price are they buying AI. So if you're increasing your expenses by 10 by a 10x, then how much are you increasing your revenue? I don't think you're increasing your revenue 10x, right? There's still issues with AI. It's not bulletproof. So to try to get businesses on board, I think the way this is probably going to go, they're going to continue to develop it. I think these companies that are developing AI, they're going to get margin squeezed, right? They're going to get hit on margins more than anything else. Everybody, that's been hopping in on AI, they're going to realize probably this next earnings cycle, or maybe the earnings cycle after that. So when we get to like January here coming up in about a month, we're going to go through that earnings, and then April. And if AI is delivering on margins, then okay. My bet would be probably they don't, but it doesn't mean, to be bearish. I just think there would be air taken out of the balloon, sort of say. But that is one where they need to develop the consistency of AI. And once that is kind of proven, to me, you would get all the other stocks, all the other companies to kind of buy into it. And then they would go through a period of of better margins, like your DuPonts, all the other stocks, right? All the other stocks, Mastercard, Exxon, because AI, we know it's going to replace jobs. Is it going to replace all the jobs? No, it's not. But it's going to help out a lot in back office type stuff. T-Mobile, Verizon, customer service areas probably help out a lot there. So a lot of those areas, there will be a lot of benefits, and you will see a transition into using AI. Those companies would then, not hire staff. I don't know if there'd be mass layoffs. Maybe there would be mass layoffs. Those stocks would be the ones to invest in. And then once AI is fully ingrained, right, across the board, across all the sectors, across all the businesses, then they can start to raise prices. But that's like you're talking like a decade away. That be, and we and I'm just kind of thinking about the same process that we saw back in like the 2000s, right? When you go back and look at the 2000s on on this time period, right? You're talking about like big tech, big tech, big tech, tech everything, internet, and then they realize what what is going to be with big tech, in the internet, and what's going to come of it. It's going to be server databases. So they start building out for it. Margins get hit. That's when the tech bubble crushed. There's other kind of factors on the timeliness of that, but the other thing is like big tech companies, a lot of them that were especially growing, so Alphabet, they didn't become profitable until late 2000s, early 2010s. And that's where they were so ingrained into most of the big businesses, into the business environment, business world, that you couldn't just say, okay, big tech, we're no longer gonna use your services. No, you were definitely gonna use it, because the the value of using their data services, servers, mainframes, all that, and housing data had changed dramatically. Remember, data used to be stored in file cabinets on paper, and it was expensive for a lot of companies. It was hugely expensive. And then you get to the 2000s, and you're getting this data migration from paper to digital. And then once it kind of taken over, then you see the profitability come from data warehouses and software centers and stuff, or data centers and stuff like that. And then it just continued through the 2010s. But now they're going to go through another one. They're going to go through another one. They're going to kind of figure out what AI is, what it's about, the best ways to kind of use it. And then like down the line, once it is kind of ingrained in the business, then then you'll see these companies kind of start to turn a profit in those big tech areas. So that's just kind of the way I think it'll go. I think there's going to be a lot more margin contraction here on the near term, and we'll probably start to see growth expectations probably come down quite a bit as we go into the next couple of earnings. 'Cause everybody keeps forecasting revenues, but nobody's really looking at earnings. But you got to factor in costs, man. You can't just keep increasing your costs 10x and increasing your revenues like 3x or 2x or 4x. So yeah, it's just an interesting one that I think this is the AI story is going to play out over the next 10 years, not the next year or two. So there's going to be kind of a couple different cycles to that, and that's why I'm a big believer on small caps like the IWM and even the RSP. I would just stay away from big caps or the big tech stocks. That's just my opinion. But as far as how some of these, like just the cues today, I mean, up 0.9%, but you're seeing all the big tech stocks just, I mean, they're all down. They're all down like 1% or more. Amazon's now like 1% down on the day. So it's very interesting. Very interesting day. All right, let's take a look. How's the dollar doing? Dollar's basically flat. Okay, dollar's basically flat. VIX gapped up again on Monday. Monday gap up. Easiest bet ever. Trading a little bit lower. Nothing crazy. GLD gold continuing to come back down. Okay, this is probably the area I would start. I would definitely start buying into gold. I wouldn't do anything leverage. I would just say, hey, you know what? I'm gonna start dipping my toes in here. Every major pivot point on the way down. So like here, um, here, this level. If we got back down to there, and if we got back down to here, I would definitely probably do some more there. This October low, but if we break that, honestly, I would wait for this 160 level. That'd be the next major one. Maybe some down here. But I mean, dude, I like it, man. I like it. GLD. Gold looking really good. 10-year yield. 10-year yield. It was up overnight. It has come down. Look there intraday. Oh, it's definitely come down a lot here over the past hour and 15 minutes. A little bit over an hour. Was there something got announced today? Something got announced? Not that I see. Okay. Not that I see. All right. I don't know what's going on here over the past hour. 10-2 inversion. Just kind of hanging out. Not really doing a whole lot today. So looks like the yields are moving together. HYG. A little bit of a pullback into the 10 EMA. Nothing crazy. If this starts to kind of just go sideways here over the next day or two, starts to curl up, HYG is going to look pretty good. Probably break up. LQD checked into that 10 EMA first time since what, November 13th, maybe? Yeah, it looks pretty good. It'd be real interesting to see what happens here. So there must have been a treasury auction. That's the only thing I can really think of why the yields dropped off as much as they did. Let's take a look. I might not have it up. Yeah, it's fine. I might not have that. Let's see here. What do we got? What else we got? So that's mostly how things are looking for the day. Let me check sector rotation. I'm just really surprised that the Qs are up, doing as well as they are, and big tech is not performing like at all. All right, so you got industrials outperforming, financials outperforming, tech is outperforming. So that just kind of gives you how much everything else in tech is really performing, holding up. Alphabet, not Alphabet. I'm sorry, Microsoft, AAPL, and Nvidia. They're all down. Those three are down over 1%. Those are the largest weightings in tech in the XLK. And you can see the XLK is actually still outperforming on the day. So that's crazy. Staples, utilities, materials, healthcare, discretionaries, real estate, energies. Energy's underperforming there. And XLC communications underperforming the most. Okay. What about intraday price action? XLK. Wow, XLK leading the intraday price action. So we'll run through some of those names a little bit later. See did they all gap up? Or are they all just getting bought up today? So XLK outperforming, utilities, discretionaries, materials, real estate outperforming, financials kind of in line with the market, Industrials, energies, staples, communications, and healthcare all underperforming on the intraday. I'm just really surprised the Qs are up. Let me take a look at that heat map on the Qs on the Nasdaq. Nasdaq 100. No group. Damn. That's all you need to know about today. That is all you need to know. The NASDAQ 100, half of it, the big tech, 7 stocks, all down over 1%. Everything else is up multiples percent. There's a couple spatterings of red out there, but everything else is crushing it. Everything else is crushing it. Apple market cap is around 3 trillion. Microsoft's at 2.75. Apple's the one I would absolutely dump. Dump it, man.